Get started with all the stocks that are in focus today, and let's start the Fatafat. Then we are joined by Ruchit Jain, who's the lead research of 5paisa.com, joining on the technicals. And from our research team, we are joined by our researcher Ansh. Thank you so much for joining us, gentlemen. Let's get started with all the stocks that are in focus today. First up is Tata Consumers, that is in focus today. In fact, Tata Consumers is one of the stocks, Kotak, Tata, both dragging the index down. Now, on the back of weak set of results that Tata Consumers posted. In fact, the weakness in the domestic market is something that the street is giving a thumbs down. If you look at the results, revenue was a miss, EBITDA was in line, and the PAT, however, came in as a beat, but the margins were in line. Let's quickly take a snapshot of the results first. Then the revenues was seeing an uptick of 13% on a year-on-year basis. The EBITDA was up 16% on a year-on-year basis. The PAT was up 7.5% on a year-on-year basis, and margins came in at 14.87% versus 14.4% on a year-on-year basis. Now, the India business revenue was up 10.3%, and the international revenue was up 17% on a year-on-year basis. Now, some of the highlights were that the short-term debt taken for the acquisition for the Organic India and Capital Foods has now been paid off, and the company is now net cash positive. The growth business is up 15% organically. Starbucks is now the largest organized cafe operator in India with 454 stores. Now, as far as the outlook is concerned, the erratic weather patterns have affected the tea and the salt production in India, which is leading, of course, to the input cost inflation, and the global coffee categories continue to face demand headwinds due to the high, coffee prices. Morgan Stanley is maintaining their overweight on Tata Consumers, but Jefferies has given it a hold rating and cut the target price to 1,170 rupees for Tata Consumers.
Okay, well, weak set of numbers, in fact, coming in for Tata Consumers, because operationally it may look good, but you have volume growth, Ankita, that has not come in line with what the street was expecting. So, in fact, the stock is seeing some major beating on D Street today. But you've also picked out Tata Consumers for us. Ruchit, tell us what you are spotting on the chart, because fundamentally this stock is looking very weak post its Q2 numbers. But chartically, tell us what you are spotting.
Yeah, hi, very good afternoon. Well, if you see last few months, the stock was in a consolidation phase in which 1040, 1020 had become a very good support. Now today, post that numbers, the stock has breached that support level. And if I just wanted to highlight the derivatives data, where an open interest built up of about 25% has been seen. So a lot of fresh short positions have been built today in Tata Consumers. So it would be very interesting to see the follow-up move. In case if the stock closes below 1,000, it would be important on a closing basis. Then we could see a continuation of this underperformance going ahead.
Alright, speaking of Tata Consumers and speaking of the rural recovery and the urban demand, Sunil D'Souza, who's the MD and CEO of Tata Consumer Products, says that they are witnessing some stress in the urban demand. Let's go across and take a look at what he had to say.
Rural has picked up, there is stress on urban. And it is my feeling that food inflation is probably hit hard. That's number one. Number two, there is a significant movement on festival dates last year versus this year. Number three, also unseasonal rains impacts both out-of-home businesses as well as stocking up for salt, etc. So, bunch of stuff. Can't point out to anything one thing specific. That said, October has started off well, so I'm keeping my fingers crossed, saying we will have a good third quarter.
Okay, well, let's move away from Tata Consumer, talk about another stock that's actually taking it on the chin today, and that's MRPL. Now, on the back of their Q2 numbers, it was a rather weak set of numbers coming in, and the weakness in the second quarter financial performance was likely a result of a weaker core GRM, which is a gross refining margin, as well as inventory loss coming in higher than what the street was estimating. Net revenue came in at 24,968 crores versus 23,247 crores over the weekend, which is an uptick of 7.5% almost sequentially. However, this time they've incurred a net loss, and a massive one at that, 697 crores of net loss versus a profit of 73 crores just on a quarter-on-quarter basis. So sequentially, in a very small amount of time, they've clocked in a very big loss, and that is why the stock is not doing very well today. EBITDA has also come in towards the negative. EBITDA loss has come in at 474 crores versus an EBITDA profit of 606 crores just last quarter. And on the back of this, you have a Motilal Oswal note coming in this morning, where they've reiterated their sell, and they've also cut the target price to 131 rupees per share. So sell rating coming in, a very poor set of numbers coming in. EBITDA slipping into the loss side. The net profit has also become a loss this time around, and that's why the stock is low by almost 3.5% as we speak.
All right, coming to you, Ansh, another earnings candidate, Tech Mahindra. Tell us, what does the report card look like?
Yes, so the company has reported revenue of around 13,313 crore, which is up by around 2.4% on quarter-on-quarter basis. Also, EBITDA has seen good up move of 16% from that 1102 crore directly to 1280 crore on quarter basis. Profit has also seen a good jump of over 45% from 865 crore directly to 1258 crore. Also margin, we are seeing good improvement from 8.5% to 9.6%. But the thing is that today stock was trading with a gain of 4% in the morning, but due to market pressure, the stock has actually erased its gains and it's trading almost near flat levels.
Okay, thanks for taking us through those earnings, fine print. But on that note, we'll slip into a very short break on this edition of Market Fatafat. Take you through more stocks on the other side of this break, so you stay tuned.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the buzzes in trade and on the back of news flow and on the back of technicals as well. So let's resume then, and let's go to Ansh, who's picked out HDFC Bank. Now this counter is really, helping, really aiding Nifty today, but it is trading with strong gains of 3% A good set of numbers coming in for HDFC Bank, Ansh, and bullish brokerage notes also aiding the stock.
That's right. In this falling market, this stock is holding on to its gain of over 3%, like you said. And yes, they have reported good earnings. NII has seen an uptick of 10% to 30,113 crore. Also, PPOP has seen a good uptick of 9%. If we talk about PAT, then that is also given some inch up by around 5.3%. Now, if we talk about brokerage notes, then many brokerages have come up with a bullish report on the stock. Macquarie has maintained its outperformance with a target price of 1900. IFL has maintained buy with target price of 1880, and Nuvama has maintained buy, and they have also hiked the target price from 1950 to 1960. So we are seeing target of around 8 to 13% from these brokerages. Apart from this, the board has also approved offer for sale of equity up to 10,000 crore from HDB Financial during this IPO.
Okay, so that's the outlook, the brokerage verdict on HDFC Bank. But Ruchit, you also picked out HDFC Bank on the charts for us. Good set of numbers, at least on the fundamentals, but on the charts, when I pull up the last 1 year chart, it's been quite a sluggish mover. Do you think now is a recovery time for this stock? It's a turnaround time and the charts could look better going ahead?
So the stock has traded within a broad range of 1800 to 1600 since last few months. So good thing is that whenever it is coming near that 1600, 1620 range, we are witnessing a good buying interest over there. And in today's trading session, post the numbers, there is a lot of short covering which have been seen in the stock. If you see, the open interest has declined along with the price improves. So the shorts are getting covered, and if this momentum continues, then we could again see that higher end of the range 1780 to 1800 getting tested. Now, in case if going ahead 1800 is crossed, then I think that would be much positive, as that would be a breakout of a long consolidation phase. So since the declines are getting bought into, I think the probability is there that slowly and gradually we would see the stock inching higher.
All right, let's go across and listen to what the management also had to say about the results during the Q2 con call. Let's go across and take a look.
Quarter performance has been stable. You can see that 3.46 against the 3.47. We're in a reasonable range that it is operated in. We continue to position to get the best and gain the market share, rather than getting into how much and what do we want to get is not an appropriate target to have. It's because it's on the other side is the customer behavior.
Okay, well, let's come back and revisit the technicals once more. And Ruchit, you've picked out GMR Airports Infra for us now. Year to date, 6 months, 1 month, the stock has been a very slow mover. Do you think that changes now going ahead? Are you seeing some steam picking up for this stock, in fact?
Well, I think there should be some more correction in the stock in the near term. We have seen a decent consolidation wherein every dip rupees 88 to 90 was acting as a support, which has been breached. So I think that in the near term, we could see the stock heading lower towards 76, 77 kind of range where the next supports are placed. So advising traders to stay cautious on this theme. Around 76, 77, I think the risk reward ratio could become favorable for taking any contra trades.
Okay, so that's the outlook coming on GMR Airports. But let's move on and talk about yet another big loser in today's trade, and that is India Mart Intermesh. Now, this company has reported a 94.7% year-on-year jump in net profit to 135 crores for the second quarter. Paid subscription addition for the quarter stood at 2,390 on a sequential basis. However, what didn't work for the stock is collection growth has slowed down sharply in the September quarter to 5% from 14% during the year-ago quarter. Now, you have a very weak set of numbers coming in. Operationally, the company has not done well in quarter 2. The stock is down 17%, and to add to that, you also have some very bearish notes coming in from brokerages. Brokerage firm Jefferies has downgraded the stock to an underperform from its earlier buy rating, also cut its price target to 2,540 per share from the 3,890 earlier. They say that the company continues to display softness in subscriber addition, leading to moderating collections growth, and that was a key negative for the quarter that went by. Now, this is also according to Jefferies, who also wrote in their note that the collection growth is likely to range between 10 and 15%, and this is something that they are seeing improving only if the company does everything else going correct ahead. The brokerage has cut IndiaMart's earnings estimate by 4% to 12% as well, so very bearish notes coming in largely, and on the back of that, IndiaMart is not doing well at all, 17% lower.
All right, moving on then, Ruchit picked out HDFC Life for us. Now, this is one of the only counters like the HDFC counters that are really holding on the financial sector, which is the only sector that's trading in the green. Tell us, for HDFC Life, what are you seeing on the charts?
So, in a falling market, we can clearly see a good relative outperformance in the stock. The stock recently went through a consolidation phase as well. But now again, that high top, high bottom structure seems to have resumed. Also, in derivative segment, there is an open interest increase of about almost 4%. Which increase fresh long built up even in such kind of markets. So I think because of this, that relative outperformance could continue. 760 was the previous swing high. So I think that would be the first level where the stock should target, and once that 760 is crossed, then the stock has potential to rally much higher from those levels as well. So it looks positive. On the lower side, good support base has been formed around 700 to 720 things.
Okay, so that's the view on HDFC Life, but Ansh, let's talk about RBL Bank. Now, this is another stock that's in fact seeing a double-digit cut coming in terms of percentage today. Tell us what's been ailing the stock and what's all of this negativity about?
Right, so the stock is trading with a loss of around 13-14% today, and they have come up with their earnings actually, and that was very weak. NII saw an uptick of around 9.5%, but if we talk about PAT, that has gone down by around 24% from the 294 crore directly to 223 crore. Also, if we talk about GNP, then that has also increased from 2.69% to 2.88%, deteriorated by around 19-20 basis point. Also, we are seeing a good increase in provisions as well, and this is mainly driven by higher slippages in credit card and microfinance. NIMs are also down from that 5.67 to 5.04%, and even brokerages seems to be getting a bit bearish on the stock because IIFL has actually trimmed the target price. Along with this, we are seeing that Investec has also downgraded their rating from buy to hold. So that's the reason why the stock is in focus today.
All right, moving on, coming to you, Richard, you've picked out Infosys for us. Now, Infosys in the last 1 month is seeing consolidating. Tell us from here on, do you see a breakout in the stock coming in?
So quite interesting setup because the stock in fact the entire IT sector in last 1 month has seen some consolidation. Infosys post numbers we have seen today, the stock has seen some correction, and we could see some more correction towards 1800 kind of mark. So I think 1800 would be very crucial support where 89 EMA for the stock is placed. So at current levels, we are advising our clients to keep the stock on the watch list. Dips toward 1800 is possible, where I think if the IT again resume its up move from there, then the risk reward ratio would turn favorable to go along with Infosys around 1800.
Okay, so those are the levels to watch out for on Infosys. But on that note, it's time to slip into a short break on this edition of Market Fatafat. But as we do that, Dharavi, which is Asia's largest slum, is on the verge of transformation. The Maharashtra government plans to transform Dharavi into a modern urban space. This transformation will result in significant improvements to the quality of healthcare and education infrastructure in Dharavi. Let's take a look at this report.
Dharavi, one of the largest and most densely populated slums globally, is home to over 1 million people living in just 2.1 square kilometers. This extreme overcrowding, coupled with inadequate health infrastructure and sanitation facilities, has led to a significant health crisis that jeopardizes the well-being of its residents. The massive redevelopment project of Dharavi by the government of Maharashtra is set to transform it into a modern urban space where health and education will take center stage. The introduction of clean drinking water and proper sewage systems will drastically reduce the incidence of waterborne diseases. The establishment of improved educational infrastructure will provide students access to quality education, empowering Dharavi's youth to pursue higher education and promising career paths, ultimately driving economic upliftment.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.